Hello, traders. It's 8 a.m. Chicago time on Wednesday, the 3rd of June, 2020. Thanks for joining me for episode number 1768. Derivatives are not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market, the S&P indices, the U.S. indices are popping higher. We have a gap up in the S&P, currently pushing up against the 3,100 handle. I talked about this earlier this week that the market is clearly showing that it will not give up lower prices. Every time it pops lower, it leaves an excess low and continues higher. And so I've been warning that shorts are likely to get squeezed. So that's where we are. We are approximately 20 points higher than the high of yesterday, with a close that was a neutral extreme high in the S&P. I'll go over that in just a little bit. The overall view today, really, there's really not much that's worth talking about other than more and more governors here in the U.S. are issuing orders to reduce the restrictions, to bring business back, and the market is responding. There were no earnings today or key earnings today. This is just more the market is pricing in a return to more normalcy. Also, the ADP came in this morning, and it was a lot better than expected. ADP is a payroll processing company which has been releasing its payroll data. It's a very large payroll processing company. It's been releasing its payroll data, and it's sort of a precursor or a foreshadower for some of the unemployment figure. And so, as you all know, this Friday is non-farm payroll. It's the first Friday of the month of a full week. And so we have non-farm payroll. So today is ADP. ADP came in at a deficit or a draw of 2.76 million jobs. 2.76 million jobs. Sounds pretty bad. The expectation, the consensus was for a draw of 9 million. Compare that to the prior month, which was a draw of 20 million, 20.236 million. So ADP came in relatively strong this morning, and the general expectation is we're likely to see payrolls also improve. The market flushed up a little bit on that. It didn't really move that far. It moved about 5 points or so to the buy side. Looking at what's ahead, we do have the Bank of Canada interest rate decision at 10 Eastern, expecting them to hold steady at 25 basis points. We do get at the same time ISM non-manufacturing in the US and ISM non-manufacturing PMI. We get factory orders as well. We get factory orders as well for April, expecting negative 16. And then, of course, we get crude oil inventories at 10:30, $36.80, just a penny below yesterday's. On strong PMI numbers, 250 points, and the S&P is up 19 and a quarter points from yesterday's settlement. And so, and the Nasdaq is kind of teetering. It's only up 14 points, which is about 0.15%. The weaker product today, the laggard, is gold. Gold is back down close to 1,700. Gold's off $22 from yesterday's settlement, or 1.27%. Let's move on to the review portion. Key elements. I'm not going to spend much time on this. Key elements expected to open at 62.75 or so. We opened at 62 and a quarter, I believe. Expected it to drop into 30.50. So remember, dropped to 30.50, and then expected a push into 30.80. Follow that? Open at 62, drop to 50, push to 80. All right, that's the key scenario. Here's what actually happened. And I'm going to spend today, just to change things up a little bit, I'm going to spend today just doing a quick walkthrough of what setups showed up for me. Here's the open at 62 and a quarter. Remember, expected 62.75. Here's the 50 area, pushed through by about 9 ticks or so. Pushed through to 30.47.75. We expected it to bottom out at 30.50. Okay, and then here's the high at 78 and a quarter, expected it to top out at 30.80. Right, so this is basically the same thing, except we had this quick pop into 69.50, which was really, really interesting. Those of you who are convergent trading, please listen to yesterday's live trade talk. I walked through the order flow impacting this move up and what happened following that, and how we were able to see or have a high probability look at how how the buyers were trapped earlier and how the sellers were trapped later. And we talked about that quite a bit. So please catch yesterday's recording. It's not a normal trade talk, just take a look there. There's a lot on order flow there that you may use. So that's where we stand. So yesterday's scenario one was pretty much on point again. The low in the 50 area, the high in the 80 area. Although this pop higher was done on pretty bizarre, kind of a pretty bizarre behavior, very strong pop at the close. We've become accustomed to seeing that. The key thing to take away yesterday is we had pushed through the IB high, so we broke the IB high. Low probability poke through the IB low. I think the chance then becomes 27-ish percent. Historical probabilities 27%ish. And then we cross all the way to the other side, and we finish in a neutral extreme up. Neutral extreme up foretells a high probability push higher in the overnight session. So holding long into the close is likely to continue higher in the overnight session, and it did, based on the probabilities. I want to walk you through this just real quick. This is the beginning of yesterday morning right here. This line right here, and I do this often when I walk away or when I take consecutive losses. I kind of play back the market to kind of get in line with what the auction is trying to do. And what we see here is an open that is responsive. So we open above the range and we pull right back into the range. The green line right here is the prior day's high. Let me turn off these stock zones. Is also, yeah. So the green line is yesterday's high. So we're responsive back into the range early on, and we have an open auction as it's pushing back and forth, back and forth. So we immediately see that we're responsive. The market seems weak, so we have a high probability touch of 53.75, which is the prior day's close, and the point of control are very high probability plays here, 52.75. Those will be your key targets if you got short in the 61 to 63 area. And there it is. It gets it. Then it holds a 51.75 and starts bouncing up to the mid. At this point, I'm seeing that the delta is negative. Delta is negative. The market has pushed down into the prior day's range. It is trading in what is basically value after pretty much a trending day up or a break higher the prior day. So I'm looking for a mid return holding the prior day's high. So the risk here is very, very clear. I'm looking for a short in the 57 area with risk with a stop above 60 or just at 60. And so this sets us up for a first trade. If we can get in at the 57 area and get them off at 52, that's 5 points to cover risk. And then we would look for the next target down, which would be 50, which isn't far. So we have to be pretty aggressive with our scale outs here to get the risk reward. Okay, so there it is, the test down, and what it does is it pegs the stop. It's unable to continue lower, so now we're backing off of the shorts. It's not able to test all the way into the prior range and push lower. And so now it looks like we've tested into the range and we're climbing out of the range. So we're looking to the long side. And so here, it's all about finding an area to lean against. This is the first area to lean against here, the 3060, the 3060 against the morning range, and it blows right through, right? 3060 blows right through. So this isn't happening very well here. But what we have is an impulse up that had no continuation. So now there's, this is that a Monty Hall problem where we expect the long now to be dominant and we expect the long to carry into 3080 per scenario one. And what happens is we get an impulse down, on delta that just could not get above the zero line. See this delta here? And so this is now a pretty high probability short. What am I looking for? I'm looking for the 30, 60, 75 area, VWAP mid in the 59 area. So here, stock short in this area right here. As you all know, the mid setup after an impulse. Mid setup after an impulse, and then look for, in this situation, look for a scale at the low of 51.75 or ahead of 51.75 for risk, and look for a continuation lower. Nice little squeeze, and again, it just looks like we've got, well, hang on, it's right here. I was in the wrong spot. It's right here. The mid VWAP prior day's high. This is the short. So now we're looking for the low of the impulse as the risk scale out, or the funding portion. Remember, we're trading off of this impulse down. The market has tested down, gave us a clue that it's not able to hold the prior day's range with an impulse higher than the impulse failed. Stop, stop. And so it's just the way of the beast here. Stop, stop, and then pulls back, gives us this mid setup, and then it drops through, and now we're looking for 30.55. We're looking for 30.52, and 55 filled, 52 filled, and then we're at the 50. So now we got to be careful because this is the designated target area or bounce area for scenario one. So what we want to see is a quick flush through. If we don't get a quick flush through, it is very likely to walk itself back out of the range and push higher. Okay, so at this point, the trade has paid for itself, has paid for the prior stops, and hopefully has paid for the prior stops and has paid for costs. And then now, as it climbs higher, we are monitoring for closing or scratching the trade. And here it crosses the mid VWAP and the prior day's high, all at 59. It's battling here, expecting a break higher. As you see, it's putting in the rotations down, are really having a difficult time pushing through. And so we expect a continuation higher. So we've already poked the IB high, we've poked the IB low, so now we're neutral. So this market is actually actively looking for buyers at this point, and the next opportunity comes with a push up, an impulse up, which was kind of slow. So now we're looking at that confluence area that we were short earlier. We're looking for that confluence area for a long, and we're looking for this to hold with a standard stop, which is about 4.5 points currently. So here it tests slower, and then it finally climbs. Okay, and as it climbs, you're scaling out, and then we got that big blast on the close. So what happened here? We got what happened here? We got a stop out, we got a stop out, and then finally pays off, and then we get a scratch. Wait for the pullback on this impulse. So this is a plus, this is a minus, and then we get a pullback, and this is a plus. Okay, so the pluses need to add up to more than the minuses, because we have risk control. I'm not going to sit here and allow a trade to take much more than than I can take on the positive side. This is the biggest problem for traders, especially online traders, is to give trades a lot of room to get married to these trades. It's just brutal honesty. You just whether it either works or it doesn't. Oops, sorry. Hang on. Let me pull this over. I guess my monitor screwed up again. So to look at the order flow overnight, we have a lot stacked at the 3100 since yesterday. Actually, I talked about it yesterday. Um, this the trade overnight has been quite balanced with an upward skew. And we see a collision taking place at 3095 and pulling back. And then since then, we've basically pushed up on the ADP right here, and we're squeezing higher into this high high liquidity area. Uh, uh, High liquidity area, and we are likely to squeeze through into that 3108 above this 3104, 3108 area above. So we are looking like we are likely to push the 3100 today, and we're likely to see some more shorts get squeezed. So be smart. Please just trade what's in front of you instead of what you read, especially in the global macro stuff. Global macro stuff is great. It's great for the guys that are trading the Aussie dollar and the New Zealand, and then they're doing spreads on this, and then they're looking for the Swiss franc and against the gold, and then the silver moves, and then this and that and the other thing. But for us people who are just looking at day trading, just don't hold any bias. Hold short-term bias for your next trade based on your setup. You have to have a biased trade, and then just put on the trade with limited risk and a defined the defined target. Your risk to reward should be 1.25 or better, and then do that as many times as possible. Again, trading is not suitable for all, but with risk, given the leverage that we use here for futures, with risk, uh, with risk control, there is a chance that you can survive your losses. Okay, so that's I just wanted to do that walkthrough today. Somebody asked for it. They thought that these sessions are becoming or to him are a little bit repetitive because I'm just covering the overall. Here's the overnight session drifting up on pretty good volume, 336,000, and it's just drifting up and holding the midline and VWAP. This is a market that is, again, not going to give up any territory to the sellers. And unless something changes, this is expected to continue. So it's making a very clear beeline for 3100 here, and we're likely to see 3100 flush through to 05 and 08. We'll see how that plays out. I want to take a moment now to remind you again, because I do want this to be well attended, and I believe it is a good product to support. It's not available everywhere. It is available at edgeclear.com. The three new micro contracts from the small exchange, we're hosting a panel with them on June 9th at 4:30 p.m. Eastern. Please sign up for this. The registrations have been great. We will not spam your email or anything like that. But do sign up, and there's an opportunity to ask questions to the people who created the exchange. The link is in your YouTube live chat. It's also on my Twitter feed at futurestrader71.com. I mean, twitter.com/futurestrader71. And I'd like you to attend if possible. Here's the expectation for today. So we have squeezed and squeezed and squeezed. And this morning, we're likely to continue to push this 3100 into the 3106. There's some liquidity at 3108. I'm looking for the market to get exhausted and then pull back towards the 3090 area. The 3090 area is relatively thick. There's quite a bit that happened here back in March on the drop. I'm expecting that to be a decent area to hold on. And then I expect the market to turn back up and get above 3100, expecting the market to close above 3100. We have been one time framing up, as I talked about yesterday, expecting higher highs with the point of control shifting higher. Uh, shifting higher, and it moves on and on and on. And so I expect more of the same, unless, it's just like water going down a creek. It just follows the path of least resistance. Until resistance shows up, we expect it to continue in that direction. Secondary, we push the open, we push the high, we push through the 3100, and then we impulse down below the overnight point of control of 3090, and then we become responsive to close the gap. And if in that case, it's likely to balance out, and it may visit 3070 before the bounce. This is 3070 down here. That would be scenario two. This would be pretty aggressive selling, and there's quite a bit of lifting that's been going on, but look at the delta here. The market has lifted quite a bit, but the delta is not ripping up, and this supports this second scenario. As it starts to push down, we're likely to see some late longs start to flush out, so we'll see some long liquidation potentially. I'll leave you with that. Good luck today, and I know this was a long one, but I wanted to walk you through my logic. For those of you who think, well, you're taking 4, 5, 6, 7, 8, 9, 10 trades a day, that's got to be expensive. Well, find a better broker. Go to edgeclear.com. It should not be that expensive. I mean, day trading is not about taking one trade and hoping that it's the best. It's not, you can't exercise your edge with one trade a day, in my opinion. So this is a good way. This is one thing that folks need to learn is you try to get as many chances as possible, and the more flips you take, the more coin tosses or more trades you take, the closer you are to your true edge. So that's just a standard principle of statistics applied to trading. Good luck.